Good morning, traders, and welcome back to another episode of Market in the Morning. I'm your host, Kevin Dubrisky, and we've got an awesome episode for you guys. So we're going to cover some fundamentals, some big moving headlines, and what is setting up in markets for you guys, so you guys can take some actionable trades off of the information we're providing. So guys, smash that like button if you're ready to make some money, because Market in the Morning starts right now. All right, that almost worked. What's up in the lab? Good morning, man. How are you?
What's up, Kevin? Good morning.
Good morning. Good morning. Happy Tuesday, man. You ready to make some money today or what?
Let's do it, man. I'm thinking it might be a bit of a slower
Yeah.
day, because
FOMC
we
tomorrow.
got FOMC tomorrow, and it might be a little day where we exercise a bit of patience rather than jumping straight into the markets, right? What do you think?
I couldn't agree more. Got a lot of chop yesterday as well, sort of leading into FOMC. But unfortunately, in my opinion, FOMC, it's not really going to be anything make or break. Trump saying again, oh, the Fed needs to cut rates because of the war. Like, dude, what are you talking about?
Yeah, it's kind of lost the shock value it used to have, because we were pricing in those rate cuts from last year, and then those have now been priced out. Markets are just barely pricing in anything for this year, right? So, and we've even seen, like, when data comes out, those rate odd probabilities barely change now. Like, you're seeing very minimal changes of 2% increase, 2% decrease. It's nothing that's changing the current focal point and narratives in the market.
Right.
And that is just currently on the geopolitical tensions that are ongoing and the risk premiums being priced in across different asset classes, right? Like oil right now, oil and dollar are the ones that are seeing more volume and volatility versus gold. You've seen gold hasn't done anything in the past 2.5 weeks. So it is a great lesson on how to adapt when certain events like this happen, right? Because a lot of people are expecting gold to continue back to all-time highs given the geopolitical tensions, right? Gold was already at such a high risk premium price that it's not attractive to buy gold at 54.24, right? It's much more attractive to buy oil at 60s and now, right? And back again at 71s, 77s. So that's where markets are pricing in the risk of war. And same with equities as well. We've seen outflows of equities for the past few weeks. Market came down to 6,600 again. And since then, we've seen an intraday bounce from here. And we are seeing ES be a bit more bullish on the day trading bias. And you can also see that all the headlines that are being linked to each bias factor, showing you why this is happening and what's actually holding weight. So you can see that whichever one has more things happening, it's going to lean more on that side, right? Like Trump Hormuz coalition rhetoric. So tankers are starting to go through Strait of Hormuz. This was 46 minutes ago. And you can see other headlines related to that, this progressing further in the markets, right? So, and that just leads to then, okay, we see a bottom happening based off of potential optimism in the markets. But that necessarily doesn't have to always hold true for a long period of time, because as you know, headlines are always coming in, things are always evolving, and that's why it's important to just always be sure which headline is actually holding weight and what factor it's actually relating to, right? That's when you see liquidity shift in real time. You see these massive gaps, you see these massive candles, because there's always something that happens that really brings that into play.
Yep, absolutely. I wanted to cover something real quick because it is what's today's Tuesday. It is March 17th. Guys, I wanted to cover real quick, just a quick trading view tip for you guys. So markets had a rollover in contracts for the S&P and NASDAQ. So futures contracts roll over 4 times a year, and you'll see that little icon right down here for contract switch. Now, if you have the B adjust button, this bottom button, clicked on, it's going to get rid of that gap that forms from that rollover. But when it gets rid of the gap, it moves all of your drawings over. So what you would have to do is you just have to measure out how big that gap originally was. You come over to your object tree, which gives you a list of all of your drawings. You click the top one, scroll all the way to the bottom one, hold shift and click the bottom, and then you come over to the settings. And what this does for displacement is it allows you to move all of your drawings at once, so you don't have to redo all of them. Big help in that area.
Yeah, you're right. I just did that. Man, I always forget. It's something I
Right?
always forget, and my drawings were shifted. That's why I was like, wait, this isn't lining up with what we were just looking
I
at
know,
last
bro.
week.
I was like deleting drawings. I'm like, oh, let me delete all these are broken. And I'm like, they're not broken. We had a gap.
Yeah, I'm like, what did trading you do to my account? So
Exactly.
no, that's a great reminder.
Yep.
And yeah, again, like just going through what we were talking about, I also do think that FOMC will be more of a dud, right?
Yeah.
So if we look at the economic calendar, the only major events that we have for this week are starting tomorrow with the interest rate decision, right? We also have PPI tomorrow as well for United States. So we'll be watching that at 8:30 a.m. We then have at 2:30, we have the Fed, 2 p.m. we have the Fed's funds target rate, which is the interest rate decision, right? This is the median rate. So it's in the range, of course, right? With the median being 3.63%. And uh, that's what the markets are forecasting the Fed will do, that it will hold rates. It's a priced in hold. There's not any rate. The majority of the focus will be on Powell's speech, which will be at 2:30 p.m. And that's where you'll see that Powell provides forward guidance, right? But again, Kevin's mentioned it before. Powell's retiring soon. Big Papa Powell will no longer be the Fed chairman. And in turn, Kevin Warsh will come in and he will be the one who will be providing the forward guidance going forward. So the focus will be on what he decides to do. And we know Powell's not going to cut. Powell's gone. He's not going to cut. He's just going to leave the rate steady. He's going to provide minimal forward guidance, in my opinion, and that's how
Yeah.
the market's just going to shape out to play.
Yeah, he's just gonna stand his ground, say, listen, we're in no position to cut rates right now. Inflation hasn't gotten any lower since the last time we met. I will say, we saw jobs were in a much worse position this last unemployment and non-farm payroll, but that's not enough without a cooling inflation to cut rates.
Absolutely agree. And I'd love to look at some labor market data
Yeah,
that we had just from the start of March, just so we can get a better picture of what truly was going on. So we had ADP came out stronger, right? But and then we go down to actual non-farm payrolls, which came out at negative 92,000 jobs. So 92,000 jobs lost. We are forecasting an increase of 59,000 jobs.
crazy.
Right. Unemployment rate also ticked up to 4.3. So if I click the playbook on these, this came well below minimums. It became even unemployment rate came up right at above them, right at the maximum. Sorry. So you can see that this is the pressure that Kevin's talking about on the labor market, right? So that's something we're going to see and shape out. Let's see what comments Powell actually mentions on it. We don't have any other labor market data this week besides initial jobless claims, but that's regular. That happens every Thursday. So the impact from that isn't a lot unless you get a big surprise towards the upside or downside.
Yeah.
So in that case, the focus will be on Powell talking about the war and potential inflation fears coming from it. It will be on labor market data and what they see as like kind of the status of how the labor market is performing. And again, it's going to be minimal forward guidance. Like majority of the cuts will come. The cuts will come when we have a new Fed chairman and later into this year. And who knows how many are actually going to happen, right? The entire point was the Fed was going to take the rate down to a more neutral level. And that could possibly be just a few cuts away.
Yep. They're still pricing, and I do believe they're still pricing in 2 rate cuts this year.
Yep.
I don't see it happening. Unless Warsh comes in and is like, surprise, I'm dovish, which he's known to be a more hawkish Fed as well. There's not much really signaling that Fed rate cut unless something extreme happens, right? We always talk about the extremes in the market. Well, that would be like we see extremes in some of our data reports. Guys, something I want to mention before we dive any deeper, we do have a free Market AI webinar for you guys, March 22nd, and we're going to be giving away free market accounts. Nawab, you want to tell them a little about it?
Yeah, so this entire exclusive training is focused on making sure your setups don't fail during these markets, during news events, during geopolitical events. When markets are volatile and there's a lot going on in the world, it can be so confusing. And we're going to give this exclusive training where you're going to come to it and you're going to walk away with such a boatload of knowledge and being able to actually execute on all this information that once was complex for people to understand and for retail traders to understand. But now we've made it into something that is so easy that you can explain to your grandma and she'll get it as well. So make sure you join, secure your spot. At the end of the webinar, we'll be giving back to the community because you guys have given us so much love over the past year and a bit, and we continue to thrive and build the product we love to build because of all the support from everybody. So join this. You're going to walk away a changed trader. I'm telling you, you're going to walk away someone who has just grown about 2 years of experience in a matter of an hour. And I'll put my money where my mouth is. So come join us, enjoy it. We rented out a studio for it, so it's going to be exciting.
That's awesome. Really looking forward to that. That's going to be great. Guys, make sure you click the link in the description in the comments below, and make sure you hit secure your spot. There are a limited amount of spots, so make sure you check that out.
Amazing. Yeah.
Now, I did want to check Fed rate cut odds for December of the end of this year. Now, the reason I want to go this far out is because this will give me a bit of an idea of what they're expected for us to be at rate-wise by the end of the year. Are we still pricing in 2 rate cuts? Has that changed at all? Okay, well, let's see. 2 rate cuts would bring us down to over here. At some point, we were looking at 30% chance. It dropped to 20. We're right back up to 22. Nothing too crazy. 1 rate cut, that's up to 40%. So have markets started to gauge a little bit? Are we starting to see a shift in the market sentiment in the rate cut sector? And can that give us more of a bearish sentiment, right? We know that markets needed that optimism at the end of last year to make us move higher. If we start hearing news or headlines saying, well, now we're just expecting just 1 rate cut, that's going to pull even more optimism from the markets, and we could even see some bearish moves off of that information alone. So be very aware of that. And again, we can use market to stay ahead of that curve. We know about the data that's coming out, the jobs report, the unemployment, the inflation data. We're almost a step ahead of everybody that is waiting for a headline because we're prepared, we're informed.
Yeah, 100%. And reading the headline is one thing. And then the other part of it is like, okay, what part of the narrative does this headline actually relate and impact to? Right? Because you can have 100 headlines just coming. Like we just had these 2 headlines coming.
Yeah.
Now you're like, okay, do these relate to anything that I'm looking at on ES, on S&P? If it does, it'll show up underneath the actual factor that it relates to and it's impacting, right? So it reinforces. If a headline comes out regarding the war, you can either see, does this reinforce the current bias or does it take away from it and flip the market in the opposite direction? And this gives you that much more conviction because you're able to see this happen in real time. If we saw a bunch of high impact headlines come in that were new developments and you quickly saw them get reinforced with the bias or maybe even flip it, then you could relate that, see the price movement actually take place in the market. So it's about connecting these dots. And that's what's happening here is that any headline that comes in, high impact headline, we see, okay, we evaluate, market evaluates, does this impact current bias or is it going to take away from it? And that's when that real-time update takes place. So, as Kevin's mentioning, this is well ahead. You're well ahead of people who just read headlines. This is reading headlines, breaking it down, connecting the dots, and showing the live impact on the chart for you. This is something like this. The amount of engineering prowess that this takes is immense. And I can only break it down to you and try to make it as easy as possible to understand for everyday traders, right?
Yep. Guys, well, let's hit that most recent candle on the ES there on the day trading bias. What's moving us higher right now, right, guys? If you're ever trading, you're using market, you never have to ask yourself, why are we moving in this direction? You come over to market, you click our most recent candle, and it's going to break it down for you.
So yeah, I broke it down as de-escalation signals from Hassid on Iran conflict and Strait of Hormuz, geopolitical tensions while driving Iran driving oil price higher pre-market, White House optimism that conflict ends soon, reduces risk-off sentiment. Qatar missile intercept earlier, but tankers moving eases supply for years. So basically, because we had some optimism come in from the White House, right? As you can see, when we looked at the high impact headlines that also came in, we had Hassett just a few minutes ago saying that tankers were moving across the White House. Sorry, not the White House. Tankers moving across the Strait of Hormuz, right? So there's some optimism. You see ES moving up higher within the last hour, right? Within the last 30-minute candle, we continue to push higher. So if the optimism maintains, but you have to keep in mind, it's always a back and forth.
That's
It
right.
is always a back and forth. So here you can see Trump Hormuz coalition rhetoric. 58 minutes ago, economic advisor has it on Iran. Tankers are now starting to go through the strait. Boom. That's when it came out. It relates to this bias factor where this is optimism, right? And that supports the bullish scenario on ES. So that's currently holding weight, right? But you can always get headlines that completely flip it.
Yep. And then very important, guys. Back and forth is extremely right because Trump Hormuz, that headline you pointed out the 58 minutes ago from Hassett, that's great. But then look at our more recent headline 39 minutes ago from Qatar saying it intercepted a missile attack.
Yeah.
So
Who heard in Doha?
Yeah, right. Which is the risk off assets. We want to be careful.
Yeah. And then look at this, just 1 minute after, no way Trump's going to back down until he sees this through to the end. Like this is constant back and forth.
Yep.
Right? Advisor Hassett says he thinks this will be over in weeks, not months. And then he says, no way Trump's backing down. Like you see, it is pure theatrics.
Yeah.
We are optimistic that this is going to be over in a short run.
Right.
Yeah, right, buddy.
Sure.
Yeah, right. The war printer keeps running. If it's not the actual money printer running, it's the military industrial complex that's running.
Yep.
So,
absolutely.
And it's always a back and forth, but you have to gauge it and see, will this impact? And that's why we built this feature here, is that any high impact headline gets automatically related to each factor. And then you're able to visually see, as well as on the charts, what's actually holding weight.
Yep. And how it affects that asset as well. If you hit your brain icon, let's see our most recent headline. Iran rejects de-escalation offers. Israel says it kills Iranian security chief. If you hit the brain icon on that, on the high impact.
Sorry, you want to share your
Oh, yeah, sure. Absolutely.
There you go.
So guys, you hit your brain icon right over here. Let's say you get a headline. You're not too sure. How is that impacting us right now? You hit your brain icon. It's going to tell you. The headline signals escalating U.S., Israel, Iran conflicts, rejecting de-escalation, and killing a key Iranian figure. Let's see. Heightening risks to Strait of Hormuz oil flows amid ongoing war. This drives bearish risk assets and bullish safe havens commodities due to supply disruptions, inflation shocks, and uncertain duration. Guys, something to mention about the whole supply disruptions. That's really not so much referring to gold. It's referring to oil, right? We know that 20% of I believe 15 to 20% of the total global inventory of oil comes from Iran. So we're causing a major disruption in that supply chain. Just like we saw a supply issue in oil a couple months ago, and oil went from silver. Silver went from $50 to $120 within a couple of months. It was insane. But just like gold above 50, above 5,000, above 5,200, it's not that it's not that great of a buy up there, right? From an institutional standpoint, nobody wants to buy gold at 5,500 just so it could pull back on them
Yeah.
20%, right?
Yeah, I would also like to highlight something is that
Yeah.
this sort of movement, when we, as exactly as how Kevin was mentioning on gold, when you have such an aggressive upside play that happened from the start of the year, basically we went from 42.80 USD an ounce to 5,600 USD an ounce. That is a massive upside play to happen within 6 weeks, right? That aggressive pullback, and now we're kind of just in this range, and we're in this range because there is not much that is adding or taking away from gold. Has kind of been experiencing both bullish and bearish plays throughout the past few weeks due to escalations, de-escalations, right? Premiums being priced out of gold. So things like this are very normal, and they can go on for months at a time. But the good thing is that these are still massive ranges for you to play. Like you are looking at you're looking at multi-$100 ranges on gold, right? Playing from 5,000 to 5,300. That in itself is a massive range to play. If we look at an example from August, April to August last year, you can see gold experience massive upsides while Trump was initially imposing those tariffs, right? This was initial Trump imposing those tariffs and coming out and all those tensions from it. And then it kind of got faded out, and we ended up ranging for about 4 months. And it wasn't until August 22nd, Jackson Hole Symposium, where Powell paved the way for the next three rate cuts that then led to the next rally on gold, with markets pricing in the upcoming series of rate cuts. So you can see that this sort of movements are very, very normal, where you create a high, you end up ranging for a while, playing within these ranges, looking at daily fundamentals and how that's impacting gold or any asset that you're trading. And then when a next major catalyst comes, that leads us into those higher highs and gold potentially heading off to 5,800 back to all-time highs. So it's not out of the ordinary that we're seeing this sort of movement, because we know that that liquidity is currently flowing into oil, right? It's currently flowing into, we see the same happening going into dollar. Dollar is at weekly highs right now. Dollar peaked at bottomed out at 95, and since then we've just seen inflows on dollar due to the geopolitical tensions and it being priced in on dollar as a safe haven. Same with crude oil. Crude oil futures went from, at the start of it, went from 60s to 120, doubled in price, 100% gain in just a matter of 2 weeks. We saw a retest at 76, but since the war and the geopolitical tensions are still ongoing, we can see that being priced in again on oil after a sharp retracement. And Kevin and I talked about this. We were like, hey, this is going to get faded out. Markets are going to buy up oil again, that this is just temporary, right? We broke this down, and that's what was cool, is that we're like, okay, 70s, lower 70s is a great buy for oil, and now we're sitting at 95 just a few days later.
Yeah,
So
bro.
this is geopolitics, macroeconomics. This is real markets, guys.
We called that low. We called that low, no lag.
76 low.
This was a Tuesday. This was a pre market in the morning episode, guys. We were looking for the 75, right? Key psychological point. It's a
Yeah.
very strong area that was holding as a ceiling in markets in the past. Well, we had a catalyst to break us out. We know markets need a catalyst for a breakout. We were able to retrace. A lot of people thought, oh, oil's selling off, short it, short it, short it. I still see people on Twitter, I'm down 50,000 on oil, but I'm still holding, blah, blah, blah. Guess what? Those people, the people that are jumping the gun on shorts, oil's going to go make its way back towards 120. Just remember, in the market, there's going to be pain, there's going to be gain. When oil makes its way back up to that 120, the amount of pain, the amount of short coverage, bro, it's going to be crazy. It's going to spike up 120, hit 130 like it's nothing.
Yeah, just squeeze everybody out.
Everybody and all those people that get squeezed out, they're going to be so upset, and they're going to flip to longs, and then guess what's going to happen? Oh,
Yeah, you're gonna see a massive liquidation. It's
yep,
pure play on human psychology.
that's
That's what
right.
the markets love. They love toying with people's psychology. And if you're getting caught up in something like this, like when you know that, okay, what's here's what I find very interesting, and I've always found it so interesting, is that we love looking at charts because it is a very easy visual representation for what the markets are currently doing, right?
Yep.
Algorithms that run the market don't look at candlesticks. They never see something like this. They look at price from a mathematical, statistical standpoint and just through ingesting large amounts of data in real time, such as headlines and other data points of economic indicators and whatnot, right? So we are the only ones who use this. And when you see a massive outflow like this, from a day trader's perspective, from an average retail trader's perspective, they're seeing this as a massive sell play. Oh, I need to jump into short.
Yeah.
What you should be looking at this is, wow, we're in the middle of a war. The Strait of Hormuz is about being shut down. This is such a good buy price point for me. We have retraced nearly 40% from highs in 2 days. Now, if things line up and I see good buying dip opportunities and tensions don't change, boom, it sets up for a clean buy for me to ride slowly but surely towards back to all-time highs. And that's the exact mindset that winners in the market have. That they don't look at this massive sell play and be like, oh, now I got a short. They look at it, okay, this is setting up for a buy. This is just regular market movement. When you see such an aggressive play towards the upside, guess what? The downside is going to be just as equally as aggressive,
That's
right?
right.
But I rode these as well from 82s. So I exited last week though.
Beautiful. Nice, man. I know you trade oil.
I usually don't.
Nice. But you know what? When the opportunity
When the
presents itself,
opportunity presents itself and you have the skill set that can transfer over to different markets, it's the same play. All markets move the same. Gold does the exact same plays. ES does the exact same plays. You just have to understand market psychology and how things work.
let's see. Let's see. Welcome's asking a question in the chat. Are you bringing one institution trader in the webinar in the lab? Would you like to share some insight which you learned from him and why you choose him for the webinar? As we are arranging.
Absolutely, absolutely. You'll find out a lot more about him. His name is Imri Gams. He was recently on the Words of Wisdom podcast as well, so I highly recommend you check that out. It'll give you a lot more breakdown of who he is as a person. But he's recently joined the market team. He brings a lot of expertise from the institutional side of trading and macroeconomics, as well as just building companies. So we're very excited. He's helping us out on the market side, and it's just the things that we have planned for you guys over the next few months. Like gives me the chills. Like it gets me so excited. Have you seen that meme with that guy just jumping up and down excited? That's me whenever I think about the next 3 months and 6 months and 9 months of work that and all the product updates that we have set out for everybody. One of them is actually going to be coming out today or tomorrow. So you're going to see new things starting to trickle down your news feed. I'm not going to give too much away, but I personally think it's an amazing feature. It really brings clarity to the users, and I'm excited to get initial feedback from everybody. So, yeah, this webinar is going to be great. It's going to be run by Jeev and Imri. So you're going to get a boatload of knowledge, and these are both traders who have decades plus experience in the markets. They're one of the best traders I know, and using the best platform we know.
That's awesome. I'm excited, man. I'm excited to see the feature that comes out later too. I think I know which one you're talking about.
Yeah,
That's gonna be dope.
yeah, yeah. Well, maybe we'll give a little breakdown of it sometime this week.
Absolutely. Yeah. Whenever it comes out, guys, if there's a new update to market, join market in the morning. We're gonna be covering it, no doubt.
We're going to be covering it. We talk about it on Instagram, Twitter, wherever we're going to be pushing it out. Make sure you join our Discord. All the updates are also sent out there, and you'll see it. Like if you use market every single day, you'll see that things change all the time. This wasn't a feature that existed 2 weeks ago. This got added last week, right? Something like the new headline feed edition. It took us about a week to build, week and a half. because we move so fast, and now it's going to be out to our users this week. And it's just we just move fast, guys. Like that's the baseline. Is that to succeed in the markets and in overall life, you must move with a sense of urgency. And if you don't, then you will be left with the crowd. And that's the last place you want to be, is in a crowd full of sweaty people all doing the exact same thing with the exact same mindset. So you have to operate differently. And for us, that means building a platform unlike anything else at a speed like no one else has ever seen or done before.
That's right. That's right. If you want to be better than the 90%, you got to do what the 90% aren't doing.
Yeah, absolutely. So we are continuing to see, sorry, I'd like to just get back to ES real quick.
Yeah. No, I know, me too. That's funny. I was going to say the same thing.
Yeah, so we are seeing that 4-hour close, right? On daily, we got bounce off this low. I love it. Like this ES, you can see the downside is controlled, right?
Yep.
But so are the bounces. The bounces. So now we'll see, okay, as we approach our last area where we saw sharp selling take place, is this an area where we can potentially see selling take place? And if things intensify, then you know that this scenario ends up playing out over here, right? But if we continue to get more optimism and we take this side out, then the upside is also in a more controlled manner rather than just straight bullish candles like this, right? Because you know that there's so much back and forth happening. That's why even the downside from this move, remember we even called this out, is that when we were last Tuesday, we were talking about that this move will get faded out. We'll go right back to the lows because nothing has changed on the war front, that things are still intensifying. You see missiles still happening. And that's exactly what happened, is that after the markets, because there's always a transaction happening, right? Sellers taking profits from lows, buyers jumping in to ride the opportunity up, buyers taking profits. Now the amount of sellers outweighing the amount of buyers in the market. So now you start seeing more controlled downside movement back down to these lows, where again, then buyers jumped right back in. So it's always a transaction that's happening. So if nothing changes in the war front and you see ES come up here, then that's potential for another continuation towards the downside. But if you see breaks happening towards the upside, new highs being created on the intraday time frame, you see the bias shifting, more headlines coming towards the optimism, now you're going to start heading towards these higher price points, right?
Yep, absolutely. Yeah, and you know what, guys? A lot of people have that mindset of, oh, we're bearish right now. There's a war, we're bearish. So wouldn't it just make sense that these range-bound markets that we see are clearly within this range for months now continue higher, even on a short-term basis? Remember, guys, just because we're pulling back for a day or two doesn't change your bias from bearish to bullish. It just keeps us within that range if we already have that range within play.
Absolutely. Absolutely. And you're bouncing off like November lows. Like we haven't seen a price point since 6 months ago.
Yeah.
5 months ago. So of course you're going to get some sort of reactive buying over here, algorithmic buying. But that's something to keep in mind, is that these are the price points you'd want to watch out for, like 6,800s, see how markets react there, understand how ES is currently developing, what could potentially take it. And even the market has 6,800 as its price target for an intraday move, which makes sense because that is the last area where we saw real selling take place.
Exactly. What is the ES? The ES, the real dubstep dad. What's going on, man? The ES is the S&P 500. So we cover the ES, which is the S&P 500, the NASDAQ, which is the top tech companies of the US. It's really a more tech-weighted version of the S&P, and gold, which of course our commodity of choice.
Yeah, like there's a lot of different tickers for S&P. Depends on what markets you trade. If you trade futures, you're most likely looking at ES1 contracts. If you trade CFDs, you're looking at SP 500. If you trade just like overall equity options, you're looking at like SPX, SPY, right? And maybe even indexes, GS, I forgot what the actual index is, GXSD or something for S&P. But anyways, so yeah, we just look at futures because this is the most like, this is straight from CME, Chicago Mercantile Exchange, right?
Yep, exactly.
And it's a centralized feed versus like CFDs. You don't have a centralized feed. So some brokers may report slight changes in differences in market price.
Can we run through? I'm gonna pull up my screen for a quick sec. I just
Absolutely.
want to
take over, buddy.
Awesome. The day trading bias on ES. So something you guys should do and utilize with market every day is the trading bias, right? And that's going to be the swing trading tab and the day trading tab. So not only should you utilize the actual chart, which has the annotations of our most recent moves, but when we come down towards what's supporting and what could flip. So every morning you have to go through these because it'll give you some insight and it'll give you some sort of forward-looking guidance as to what headlines you should be looking out for. So what could support this bias? Trump Hormuz coalition rhetoric, right? So maybe the US led protection plans reduce supply disruption. That could help us lean more bullish. So look for a headline talking about Trump and the oil supply. Gulf states press US to neutralize Iran. US industrial production beats 0.2%. China monetary base surges. We'll skip on that one. Q4 earnings beat forecast. So we're seeing a lot more bullish sentiments on here. So at this point, we would look for those bullish headlines to come out. What could flip the bias? Strikes on Tehran. Hormuz threatens intensify. So again, same thing where we're very back and forth. We're down the line in these markets right now. We could either fall over the fence on one end and we hear more escalation and more bombs and more attacks and we start to sell off strong, or we hold steady right now. We could see maybe an intraday pullback back to the upside like we saw yesterday.
Yeah, yeah. And I personally don't think this war is going to be over. So
No.
I think if we can get to a higher price point on ES at
Yeah.
potentially 6,800s, a little deeper above 6,800, that we could see potential selling come back like higher 6,800s, maybe 60, 68.35s, 68. Yeah, that area right there. Sorry.
Yep.
Yeah, that
Yeah, no, I'm looking at the same spot, like right over here, right?
yeah, right over there. Yeah, exactly.
Like the sweet point to stop out all the people that have been chasing shorts for the past week or two.
Yeah, and then things intensify on the war front, and you see more outflows back
Yep.
from those premium selling points, right? Where sellers were previously jumping in. So markets are all about reacting on what's happening. You understand it, you digest it, and you act on your intuition. And now, where you see, if we come up here, you see buys start to flip, things start coming, and headlines start coming out that are intensifying war and showing escalations. Now you're like, okay, we might see institutions starting to dump S&P from up here and take shorts on it. So this is how you translate what's happening in the world into actionable ideas and how to actually take trades and make money from it.
Exactly. I can't believe how range bound gold has been lately. Talk about a poor, just
Yeah,
non-directional, can't find a trend to save its life. Clearly trying to hold bullish because of the macro aspect, but just failing because clearly there's not enough buying going on.
yeah. There's not enough buying going on. It's very range bound since Sunday. All of last week we just saw just selling and take place. So gold, of course, is still bullish, but you
Yeah.
can see these corrections that come in on gold can sometimes take out lows very violently, but it's quite normal because when you look at the actual range, like this is the low 4,400s, this is the high. Like, what do you know what I mean? Like,
Right.
we're still very bullish on gold. And like I was mentioning, sometimes these ranges can play on for weeks on end, months on end, until you get the next major catalyst that's actually going to bring attention and volume back into gold.
Yep, exactly. And guys, something else to mention, we just broke 4,500 only recently, right? That was late December, early January. So for gold to trade back to that range wouldn't be us going, oh, we're bearish on gold now. We'd
Yeah,
just still be
yeah.
within a range.
You would still be very, very bullish. Yeah.
Yep.
Like this, if you were buying gold at 5K, there's no reason you shouldn't be buying at 4,400. You know what I
Yeah.
mean? Like
Yeah.
it is an even better buy price. But that's what ends up happening is that people exhaust, like burn through their trading accounts at
Yeah.
trying to trade a range like this. And then when the actual market move happens, they have nothing left to trade with.
They burn through their accounts.
They
You
burn
burn
through
through.
their accounts. They lose so much trading markets like this, trading like something like this, right? And then when the actual market sets up, you're like, oh shoot, you lost your confidence, you lost your conviction. So it's best just like when you have FOMC coming up, right? Tomorrow you have the Fed interest rate decision happening. When you have uncertainty on gold and just range bound conditions, that's all you trade, sit out. If it's
Yeah.
not all you trade, okay, focus on S&P 500. See how markets are setting up. Focus on crude oil, as you know that that's where the volume and volatility currently lies and the focus lies.
Yep. Yep. Give
So,
yourself more opportunities. Don't
yeah,
be so attached to just one chart, just one asset.
absolutely.
But that
Absolutely.
doesn't mean also create a list of 20 different tickers you go through every day.
Yeah,
Give yourself the handful, know that markets and know that different types of market structure and different type of economic events are going to impact them differently, so that when gold is trading range bound for this week, we know that the S&P and NASDAQ might be giving us a better opportunity.
absolutely. And they have, right? And they
Yep.
100% have. Oil has been giving way better
Oh
opportunities.
yeah.
S&P has given great short opportunities over the past 2 weeks, even these bounces from lows. So it's that money is still being moved around. It's that it's just not being moved in gold at the moment.
Yeah.
So
Yep.
that doesn't mean everyone's on the sidelines. It just means money is being located somewhere else. And
That's
that's
right.
normal. And that's very normal. That's just how the markets work, where investors pool money from one asset and put it into another asset.
Yep. Awesome. Guys, don't forget, hit that like button. We will host a special episode of Market in the Morning tomorrow for the FOMC meeting. That's at 2 p.m. Eastern. Be weird if it was at 2 a.m. Eastern, very early in the morning. But I'll go live here, guys, on Market in the Morning here on the YouTube channel at 1:50 p.m. Eastern tomorrow. So 10 minutes before the actual live event happens. We'll cover it. We'll see the headlines come in real time. I'll even pull up Powell's live stream, see if he says anything that we could react to, right? See if markets want to react to him, see if he's wearing his purple tie or not.
Yeah.
And we'll, again, at this point, though, we are expecting a bit of a nothing burger where nothing goes on. He says we're holding rates, no reason to cut right now. Trump gets on after and goes, oh, well, that's dumb. He should have, of course, put it through, yada, yada. But guess what? The Fed and the government, the Fed and the president have nothing to do with each other. The Fed is its own separate situation. The president should have no pull on it. Remember that.
Yep. And it's going to be a nothing burger for sure.
Awesome, guys. Noab, is there anything you want to leave us off on? Great episode of Market today.
No, just operate with calmness this week.
Yep.
It is going to be a bit of a almost not a challenging week, but it's going to test your patience just because of everything that's going on, plus the rate decision that we know is not going to hold much significant weight, but nevertheless it still has focus. So
Absolutely.
tune in tomorrow. Kevin will be breaking it down like he always does.
Bang, bang.
To
Yes, sir.
an amazing degree. And yeah, thanks everybody for watching.
Absolutely. Guys, have a great rest of your day. That was Market in the Morning. Noab, thank you so much for being here today. And don't forget, guys, make sure you sign up for that live Market AI webinar that is, again, linked in the comments below. And we will see you guys tomorrow. Take care. Peace.
Peace.